Our next guest helps investors, such as CalPERS, find private equity firms with which to invest their money. So all told, he advises firms with more than $140 billion. Eric Hirsch is the Chief Investment Officer at Hamilton. In sorts, is to basically steer private equity investments, your clients want to be there, to the right places, obviously, for your clients' needs. What are you hearing, big picture right now? What do they all want aside from yield?
They want that.
Speaking, I'm sure they do. I don't know if you can share it. I mean, are they saying just get us 7% with a good, clean manager who's not going to create a PR nightmare for us, and that's pretty much it?
No, I think
Siemens, Sunoco, these are just three of the companies that are your clients that you're helping to steer PE money into. What are you seeing as far as holding time? What CalPERS, what Sunoco, what Siemens, what do they expect as far as return? We know it's a longer hold, but is it getting even longer? So have something to show for the time and attention made in the investment.
Everybody likes to see exactly.
Where in the world are you looking? Because I know that it's not just North America.
Yep, we do.
Pretty high on your list, South Africa and Europe. And I'm just curious, Latin America, when you're considering investments there, advising your clients to make investments there, is it Mexico? Is it Brazil? Because there's a lot of variety, obviously, in that region. PE is good at, that is to say, industrials and manufacturing and infrastructure.
They have certainly.
As South Africa goes, is that a mining play, an energy play?
No, actually, that one is
difficult for you. Is first of all finding the one, as you said. So I'm going to ask you what metrics you use, and then let's say that person, based on all your analysis, should have been a good pick, is not a good pick. Obviously, that you made, which is not easy either.
No, I think. On the ground, meeting with managers, you're doing
clients that you do have very much appreciate the due diligence, or else they wouldn't be doing business with you. So that's
no, I think
Europe was actually on the list as well, and I'm curious.
Contrarian. Definitely a contrarian.
The statistic often, but last year, Blackstone, more than 50% of the company's revenue came from lending and real estate. How do you see it as an advisor? And you just referenced it in a way with what you're doing in Europe. How strange is it to you that PE firms are taking the role of what used to be big, boring banks?
They are.
Thinking for themselves. I was very glad to have you here, Eric Hirsch. Thank you for joining us. CEO joining us there from Hamilton Lane, a PE advisory firm. When we come back, the fiscal cliff and its potential.
Us is probably a few $100 billion.
Cliff talks are stalled. President Obama and House Republicans still at odds with who should pay higher taxes. And when we talk about cuts, we often talk about direct cuts, but economists have been warning it is the trickle-down effect that could pack the real punch. Bloomberg's Matthew Dowd visited one town that is bracing itself.
Here we've come.
Dowd will have more stories from the edge of the fiscal cliff, USA, tonight, 9 p.m. Eastern, right here on Bloomberg Television. When we come back, numerous firms put the brakes on M&A in 2012. We're going to show you the role that private equity firms played in this year's slowdown. Plus, Philadelphia has centuries of history. In fact, its role in the startup of this country makes some say it was the first American startup. We're going to tell you about the city's effort to attract and keep new tech companies. We're back in just 2 minutes. I'm Deirdre Bolton. Welcome back to Money Moves, where we turn our focus to alternative assets, places investors are putting their money outside of traditional stocks and bonds. We do want to bring you some of our top Bloomberg headlines this hour. General Motors is taking steps to end government ownership in the company. The car maker is buying back 200 million shares from the U.S. Treasury for about $5.5 billion. After the deal is done, Treasury will still own about 19% of GM, which it plans to sell within the next 15 months. Taxpayers likely to lose billions on the $50 billion bailout plan, though government actually made money on its TARP-related investments in banks and AIG. Market-making firm Knight Capital has reportedly accepted the takeover offer by the high-frequency trading company Gecko. Knight chose Gecko over a rival bid from Virtue Financial. Gecko offered about $1.4 billion for Knight in cash and stock. Knight nearly went bankrupt after a trading glitch earlier this year, which caused the firm to lose about $440 million. The cost of riding the New York City subway is going up. The fare for a ride is going to go from $2.25 to $2.50 in March. Fares for discount passes, commuter trains, and buses also rising, as are some tolls on some bridges. The MTA is hoping to raise an additional $450 million a year to deal with projected budget gaps. In the meantime, take a look at stocks. They have been most of the session along the unchanged line. We're going to take you downtown. Josh Lipton is on the floor of the New York Stock Exchange. Josh.
Well,
very much. That is the very latest with the equity markets. If you look to treasuries rising for the first time in 3 days, that's why your yields are lower on the 10-year. The White House saying President Obama would veto a Republican budget proposal. So that, of course, is giving some support to treasuries. If you look at commodities, we'll show you a snapshot here of some of the softer ones. To the CME. Phil Striebel is joining us from RJO because of its link to oil or for another reason?
No, because gold is...
No, it's hard to talk about gold without talking about the dollar. What kind of relationship do you see developing there?
Yeah, see, if you look...
Philip Striebel joining us there, senior commodities broker at RJO Futures with us from the CME. When we come back, M&A in 2012... Since we are close to wrapping up this year, it's a good time to review M&A activity in the past 12 months. Private equity involvement has certainly been a factor in what's going on with mergers and acquisitions. We bring in now our in-house expert, Bloomberg senior analyst Ian Adulower. Actually, between 2012, if we look at what's happened so far this year, what happened last year, what is the rate of slowing? What kind of lack of confidence, right? There's a lot of companies, they have cash on the balance sheet, but if leaders are unsure about what's coming next, it tends to make them pause.
That's true.
Many things that you do here at Bloomberg is basically master the data that we have inside the Bloomberg terminal. What did you find as far as bright spots, if there were any, in M&A?
There were actually quite a few.
Crunch a lot of data, you have a lot of inputs to get this coming out. What about the role of private equity? What has that done or not done for M&A this year?
Well,
Speaking of dry powder, I mean, you have some figures. Just how much money are we talking about here? Before we let you go, PE exits, did that play a role? For example, if you saw a firm that had a successful exit, the investors got paid, how did that... Always glad to see you. Thanks for sharing the data. Our senior analyst here on M&A. Well, when we come back, when you think of Philadelphia, Boston are recognized East Coast tech hubs. Startups are born there, financing is found there, venture capitalists have established offices. But you can add another city to the list, Philadelphia. It has a plan to keep more startups and entrepreneurs local. The mayor says the plan could revitalize the city.
It will absolutely help.
For the city, more young people are staying there or moving there. Between 2000 and 2010, the population of 20 to 34-year-olds rose by 50,000, even as nationally that younger part of the population declined. When we come back, expanding your investment vocab with Bob's buzzword of the day. FCPA is the term we're going to tackle. It's an acronym. It relates to Walmart's so-called Bananagate. Bob will tell you why you need to know about it, especially if you're an investor in publicly traded companies. We are back in just 2 minutes.
From the plane.
Yeah.
To be true, sir. I believe that when pigs fly.
Welcome back to Money Moves. Time for our daily buzzword, one investment term to improve your alt vocabulary. Bob Rice is here from Tangent Capital Partners. Is a big issue for many large companies here, and some actually that even face fines. What are the implications?
Big fines.
Trees, especially ones that are still developing. This is basically how business functions there, whether or not there's any U.S. company involved or not.
Exactly. So you know.
Life, you are a partner at a very well-known law firm here in the city. What is the background to this legislation, to this law, basically?
It's a very interesting thing because, you know, back in the...
Forward to modern times, what is permitted, what is legal, what isn't?
It's a really interesting thing because
I mean, what does this mean for you if you're a stockholder?
So, you know, it's criminal. So
please do your due diligence to find out. Thank you so much for joining us. Mark Crumpton is here. Bottom Line is next. He is going to have